Right, just checking whether we're actually going out because yesterday was all a little bit twitchy. I think we're live. Can everybody see me? Can everybody hear me? Do let me know. All right, I think we're good. Yay. Welcome to the London session, everyone. Here we are on day 2, so very exciting stuff. So yesterday we had that all-time high smash in gold. So I'm going to be looking at something similar. I ran a little test trade in a combine and I got, I think it was about 22 ticks or something out of it. But now we're seeing that typical pullback and lack of momentum, which is something that plagues London quite a lot. And yeah, so we're going to check out some other markets as well. But first, let's have a look at the daily chart of gold, because gold is something that I quite like to trade during London. Look at that. Isn't that beautiful? So we went all the way through to the all-time high. And now we went 100 ticks above it. Now we're seeing some pullback. So one of the things that I was talking about on Markets Talking with Dee last night, if you were watching me with Eddie, Jay, and Robert, or we were kind of stalking, or stalking, as JD was saying, stalking the all-time high. So I actually wanted to keep my trade longer and to keep it all the way through to that all-time high and past it, but I got really tired and I just, killed the trade. I think I made like about 290 from it, and I was just like, you know what, I'm going to bed. But here we are. So, it went through the all-time high. I don't necessarily want to fight that today. It's always a little bit dangerous to try and fish for tops, and it doesn't work very well if you're looking for some very big trade like I usually do. So I want to see a pullback, maybe, ideally down at least to VWAP if we're going to find any sort of a decent trade today. Let me just mute YouTube because I can hear myself in an echo. Yeah, so we're going to have a look at what happens around VWAP, and then if we get a continuation to the upside, that would be perfect. In the meantime, let's sniff around some other markets. Yesterday, Carl Hungus mentioned copper, and I've never really traded copper. I think I probably put on like one trade, and I couldn't find the symbol right off the bat when I was looking at my platform, but I do have it. So I had a look, did a little bit of research on it. It does move for London. Like if you look at my Blatic DR indicator, where I basically collate and aggregate some stats about the sessions, it says London 143 ticks. Now copper moves at about $12.50 per tick. So it's kind of more on the slightly more expensive side, and there are no micros. So obviously you would probably have to trade that on a slightly larger combine. I don't think it would be very suitable for a 50K because you're not going to give yourself enough swings to actually find a good trade unless you kind of do one trade and you manage to find a very high probability trade. Yesterday, I ran a little test trade into a failed auction, the copper did, and that worked out pretty nicely. But I went through to do some research on it. It mainly does an extension of the initial balance to one side by the rate of like about 60%. I used EdgeTool for that. However, it's not really always sustained, so it's not like it goes into a breakout and then continues. On a lot of the days, you're actually going to get a failed auction after that break. But like a lot of things in London, that failed auction tends to be a partial failed auction. It's almost like a failed auction, if you will. And that means that taking profits somewhere in the middle or even the lower third of the initial balance might not be a bad choice, instead of looking for all the way through to rotate to the other side of the initial balance. And then maybe go into a neutral day or something. So that wouldn't be a strategy that is super high probability. So the more I go back in time, the more you see those single-sided breaks. that don't really have too much follow through. And then here's a neutral. What is this? No, this is New York. We don't want that. So London, again, this was a neutral day type that started off as a failed auction and then extended. But there was a little, there's a little catch here because this was a gap fill trade. So in effect, they probed the initial balance to the wrong side. When I say they, who are they? The wizards? No, it's the market makers, right? So the market makers play these games whenever you're going to have a neutral day. And sometimes if there's a possibility for a gap fill, they will push it to the other side and then some. So that's what we've seen into the overlap on this particular day. When was this? This was 10th of July. So those sort of setups do happen, but the conditions have to be fairly favorable. All right, so copper is something that I'm going to put on my watch list for London. So thank you, Carl. Again, community working to do its thing and giving us hints how we can improve, what we can look at, ideas of new products. This is why I love the prop industry. Now, some housekeeping to do. I think that we have a new video by Coach Robert. Let me go back to Topstep. As you guys know, we have pretty awesome performance stats now. Now, unfortunately, this is not yet available for live accounts. And it's just like killing me not to see my stats in this way. And I would love to hear what Coach T has to say. Yeah, so basically we have the dashboard. You can look at it in many different ways. And Coach T is going to give you some, interesting, advice for how to improve your performance, but obviously you need to do a lot of the work yourself. If you want to have a look at how Coach Robert has done his 5-minute video, he does these like little bite-sized chunks that are very easy to understand. So he did a video, 5 minutes or less tutorial, breaking down the new performance dashboard on Topstep. So if we can get that link in there, I can do it as well if you guys are a little bit busy. So let's do that. All right, so I've plopped in a link in the chat where you can have a look at it in case you're a little bit confused about it and you don't quite know what to do with these stats and stuff. So have a look at Coach Robert's video. He is very, very good at what he does, and he's super good at explaining how things work. So that's what we all need, right? Okay, back to the markets. Let's see what's going on with gold. Where did I put my chart here? And then we're going to get to some questions and perhaps maybe find a topic for this session so that we can maybe start to build a playlist about profile or average session ranges, because I have like 3 different uses for them, or anything else that you want to know, how to improve your own trading. We can look at all of that. And then maybe I can pick one of the questions to dedicate, a little bit of this session to that particular topic. What time is it where you are, Dee? Well, at the moment we're coming up to 9:39 a.m. I live in London, so it's across the pond. So good morning for me. It's the time of day when I usually trade London anyway. It's not like, I have to get up at the break of dawn to do this. And when they asked me whether I wanted to run the London session, I already talked about this on my own live stream because I was kicking around the idea to start the London session. I feel that's something that's been missing in this community, because a lot of people cater to the New York session, right? So you have a absolute ton of streamers who do all of their streaming either in the pre-market and for the beginning of the New York session. And then very few of us, if any, apart from, myself and Tom Hugard. And even he took a long hiatus from doing any live streams, but I see that he's back now, so that's pretty good. Tadas says, why NQ dropped that much? I don't know, man. Like, it's NQ is a slippy market, I don't I don't have a crystal ball or anything. I don't know why I dropped. NQ does NQ things. There was a little bit of catalyst from the Trump event. And I feel that there was wasn't there a Fed speaker yesterday that was talking about rate cuts being likely or something? I wasn't paying attention too much to her comments, but I think there was something like that. So that could have, weighed on the equities a little bit more than usual. And yeah. All right, I still lost my gold chart, so let me find that. I think it's here. Yay, there it is. Okay. Copper is going into that gap fill potential, so that's interesting. Let me do the copper thing in here as well. Do you know what? Let's run a little copper test, because like I said, I've never traded copper. But I am very interested to see how it behaves. And this is why we do this in combines. We don't do it in our live accounts. We test things out first, and then we can see how it behaves. So with 140 ticks average session range, stop loss size, let me decide on that. Let's go with like 35 ticks or something. And I'm only going to do one lot. So I'm giving it a bit of a wide berth here because I don't know exactly how it behaves in real time. So I'm just going to do my regular sort of gap fill trade to see whether this is going to work out. 35 tick stop, about a 70 ticks profit there. Oh, why didn't I change the ticks? There it is. Okay. And I'm just going to check my target to see whether I'm not being a little bit too ambitious with it in relation to the gap fill. Gap fill meaning I'm looking for the value area low from yesterday's London session to get tested. That's located at 449.65. Okay, so I'm overshooting a little bit. 449.65. So there it is. Okay, so to the tick. Okay, I wasn't that far off. I was a little bit ambitious there. So we're going to see how that works out. I'm also going to do my risk rewards tool on the chart itself. This is something I like to do to stay completely impartial whilst I'm in a trade. Just don't know whether we are, yeah, we're in the same contract, because we are going to have a roll next week. But I think for now we should be good for this contract. Usually gold and some of the metals like to roll a little bit early, but I think this might be too early, so we should be safe. Okay, so I'm going to let that run, do its thing, to see whether we do get the gap fill. Nice work, Carl. I've just seen that. Locked in another 500. Awesome. Very, very good. Okay, let's see if there are any questions. How do you spot reversals early? Wow, that's a loaded question. Well, you have to have a lot of experiential data. You have to practice a lot, and you have to see how the previous reversals actually played out. Now, that's never going to take a week or even a month. It's going to take a lot of, different ways of spotting reversals, journaling, what time of day it happened, how did it transpire? What did it look like on a ladder? Maybe was there an order block ahead of it? Do you have any larger time frame area? What sort of a setup it was? Was it maybe a failed auction? Was it a reversal from the value or something similar? But every reversal is going to look ever so slightly different. And I would start by having a high probability level that you know has worked for you many times in the past. And here's where, again, experiential data comes in. So we cannot do anything with just like, 10 trades. We have to have a large sample size to see how valid that idea is. So if you have one level, you need to go back usually about a 50 to 100 trade sample size over at least a 3-month period to make it worth your time, and to actually have any statistical relevance at all, and then see how the reversals happen from that level. Now, I have quite a few levels, right, that can cause a reversal. So I have the outer value edges, I have the average session and average daily range levels. I also have the, some of the more market-generated information, like the initial balance reversals. Those might be quite tough to figure out, especially on a neutral day, because there's always a little bit of guesswork that the market is going to ping back the other way. But if you start looking at the high probability levels and then track how those reversals are happening, eventually you should be able to spot a reversal fairly early, because you will have signs. Things like if you're looking at a short, and let's say we come up in this copper trade, we come up to the value low, which is where my target is, and then the market starts to slow down. And then maybe if you drop down to a 1-minute chart, you can see a range get established. Like suddenly you have like a little bit of an M formation, and then you get a lower low on that time frame. And then you look at the 5-minute chart, and that low holds into the close of the next candle. If you're using a ladder, you might see a whole bunch of orders coming into the opposing side and having an effect on price. Like there's like a million ways that you can spot early reversals, but it's always down to the amount of sample size that you simply have to live through, journal through, and just obtain a lot of knowledge about it. Okay, how do you get the ticks to show? I only see the dollar amount. I hate ticks. I hate dollar amounts in any shape and form, because once you start sizing up, it totally screws me. And, I'm somebody who has traded anywhere from micros all the way up to 120 lots. So that was, I think 160 lots was my absolute biggest size that I've ever traded. But yeah, so how do you get ticks to show? There is a little setting. So you go to settings, and then if you go to charts and data, there's this little area called chart value display type. And when you drop down, it says dollar, ticks, or percent. I like to look at ticks because most of the products that I trade, they typically, I would typically use anywhere from about 20 to 35 ticks, maybe sometimes 15 ticks if we have a very slow day. But I have a very good feeling of how the trade is doing if I have it all in ticks. So, and in fact, if I'm trading my live, what I will do, I will go into privacy and I will just block out everything to do with monetary values. I don't want to know about it. I want to focus on the process, not my P&L. Whenever I start looking at my P&L, I start chasing. I'm like, I've made 800. Why don't I make 1,000? So, nobody's completely divorced from thinking like that. So this is why I like to just block out everything dollar related and trade through ticks only. And if you listen to Hogue and Eddie, when they talk about the old pit and the way they were, nobody ever talked about dollar amounts. Everybody always talked about ticks. Oh, I made 10 ticks, I made 50 ticks, I made 20 ticks. And that's kind of what I want to start to implement for this session as well. Making 500 is great, but we have no frame of reference. I don't know whether you're trading a 50K account, 150K account. I don't know what size of stop loss you use to get that. You could have used a negative risk reward, and now you're boasting that you made $1,000, but actually you risked $2,000 to get $1,000, which is a terrible terrible thing to do over a long run. If you're looking for longevity, stability of the system, and all of that, you need that positive risk reward. I'm somebody who likes to float in the middle, so I'm not aiming for a super high risk reward nor super high accuracy, but I like to float between about 40% all the way up to 65% on average for my hit rate, and then I aim for ideally 2R, but I will take it off at 1.7, 1.3, 1.5, like anything that the market gives me that is statistically viable to get you over that hump of being sort of a negative risk reward, or having negative risk reward, or having a break-even risk reward, which would be 125 on like just over 50% accuracy. That's like literally floating on the edge of profitability. So know your numbers, know what sort of winning combinations are. This is where the performance dashboard can help you massively, because it will tell you what's your profit factor, what's your percentage, what's the overall trade win, what's your trade by trade win rate. So you know all of that can help you massively. Some of the numbers to keep in mind is that if you have a 2R multiples as a default target, so you risk, let's say 100 and you want to get 200, and you don't mess with it, you just let it hit the stop or let it go to target, you really only need about 35% accuracy to be profitable. As soon as you get to 37% and 40% accuracy, you're actually smashing it as a trader, and you can call yourself one of the best traders in the world, because a lot of the best traders, like we have Paul Tudor Jones and stuff, they only had accuracy of about 49% on their best times, right? So they don't boast super high accuracy, they boast super high risk reward. Because some of the trades that the big hedge funds have taken, and the turtles and all of that, like turtle trading traditionally had a 30% accuracy, but some of their trades had like 30R multiples for targets. Now, we can't do that as intraday traders, because intraday trading is a little bit different. We have that time constraint, the constraint that puts a wrench in the works if you want to go for those really ambitious targets, and we have to find that middle ground. Obviously, it depends on your personality as well. It's not just down to, not just down to, oh yeah, this is how this person trades and I'm going to try and copy them. If you are somebody who has a completely different personality than me, and you can't wait, and you're really twitchy, and you just want it instantly, it's not going to be the right way to trade for you. But I'm somebody who can wait in trades reasonably long for an intraday trader. Having said that, I don't sit in trades for 6, 7, 8 hours. My average trade time is usually 45 minutes. So I'm kind of all like in the middle, right? Middle accuracy, middle risk reward, middle hold times, nothing too crazy. And, I found that really works for me. Okay, let's have a look at some more questions. Dee, how to use the dome to know trade direction? Yeah. So you don't use the dome to read trade direction. You use the dome to see whether something is reversing or continuing, and how much power it has. It's not necessarily to do with direction, because the direction is something we can't tell. And the dome, the ladder, is so quick that it's for me, it's only good when I'm looking at the level that we already arrived at, and then I just want to confirm that it is what other people are looking at who have deeper pockets, so that I'm not just me by myself on my own and going, I think this is going this way, but if the market makers and institutional players don't think the same way and nobody's supporting that trade idea, guess what? You're going to get stopped out. So that's how I use it. We can look at the dome. It's not terribly useful for London because I find it very slow, and therefore it's going to be a little bit less useful. But let's have a look at something that has... Yeah, this is all pretty even. And recently ES has been a little bit annoying because they're running these algorithms that sandwich the price in between, like the middle. And it looks like there's a whole ton of orders up and down, but what is happening is just the algorithm, like putting a little bracket, a sandwich. Let's have a look at maybe GC, because that might be, oh, interesting. What's happening there? So I don't seem to have 100 levels, which is fine. I mean, no problem. Let's have a look at ES actually, because we have some orders here. So the primary way that I like to use the DOM is to look at where the larger orders are, and then to try and match them up with whatever I see on my other chart or on any other chart, to see whether that has any merit, whether I have any levels of interest there at all. So for example, right now on gold, everything looks pretty even here. I don't really see, for some reason I can't see the rest of the levels. Yeah, let's go back to ES, because that's not very useful. Again, typical London session. I'm going to drag out a chart of ES. I don't know what it's doing today. All right, so it's moving, so we can work things out here. So looking at the ES chart, just looking at any kind of sticky outy areas where we can see bigger orders. And obviously ES is a pretty thick market, usually. All right, so just to compare the sizes of these orders, we mostly have about 40 up to 100 units per price. And the only area that I see that we might use as like a sandwich block of orders, something that might cause a wrench in the works, is around 5680, 5679. So let's see what we have around there. So 5679 is actually 9 EMA on a 15-minute chart. I mean, how relevant is that? I don't know. So a couple of ways to use this. If you're looking for a continuation downwards, you would look for the market to pull into that order block that is sticky outy on the dome, and then to look for the market sort of selling off from there. So it's not really necessarily a directional thing, it's more like a level thing for me. If you're looking for the market to keep going and to maybe go into a failed auction, so going back to close inside the initial balance range, you want to see those orders disappearing as the price is getting to it. But it's usually accompanied with some pretty strong moves in the same direction that assault that area pretty strongly, and then suddenly you see them bailing. You can see this a lot more on Bookmap rather than just a plain old dome, because it visualizes it better, right? So you can see the sandwich of orders and then as the price starts moving towards it, they sort of start bailing until you have a clean slate. There's nothing left. And then they just kind of run through it. So there's a couple of ways to do it. It's something that I've probably spent about 3 years just staring at it before I started to really understand exactly what is going on. And one of the biggest issues with reading the ladder is that it's so discretionary. You have multiple ways of how you can use it. It can either be a level. It can either be used to see whether the bids are coming in or whether maybe the offers are coming in. So whether it's catching a bid or hitting an offer, or the other way around. I'm sorry, it's early in the morning still. But whether it's, orders buying, buyers, big buyers stepping in and having an effect on the price and raising the price, or whether they're selling at that level. But if you're looking at something to run through the level because it's too close to the current price, it can be a springboard. So once those prices effectively disappear, once all the units disappear from that particular price, you then have a clean slate to run a momentum trade through it. You can call it a liquidity gap, liquidity vacuum. Some people call it single prints. I call it single prints. Some people refer to it as fair value gaps. So you can either have a reversal from there, or you can have the price just going really quickly through it. Sometimes you can see that on the volume profile as well, or even just pure volumes, right? So if I just kick off volumes, usually thin, low volume nodes are areas where prices go through really quickly. they either reverse from it or they just drop immediately through it. So again, many ways to use the DOM. Like we could sit here and talk for the next 3 hours on all the stuff that can happen with the DOM. Gorkum says, good morning, Dee. Could you just talk about key indicators that you like using on your charts? Do you use DOM? So like I said, yes, I do use DOM. Not as much as some people. It's not the be all and end all of what I do, because I do start from the charts and then I'll use the DOM as sort of a supportive tool. I use Market Profile. I have my own indicators that are from Blatec, which is my company. So it used to be a separate company, and then they sort of decided that they wanted to partner with us many moons ago now. So we've been operating as sort of a similar entity, Market Stalkers and Blatec. And all of these indicators that you see on my chart, that's where they are, right? So I have Blatec SD, which is Blatec Supply and Demand. Blatec MP, which is not Market Patak, it's Market Profile. So we don't yet have an indicator for Patak, but we might do at some point. I also have Blatec DR, which is the daily range. This is the part of the daily range. You can see the Tokyo session, average session range, London session range, New York session range, and then the current traversed session range. Like, are we exhausting it, exceeding it, by how much? And then you also have the overall 24-hour. It's like literally just an aggregate of all the data that I wanted to see in relation to various session ranges that I use. So I find it pretty useful, just so that I don't have to use Excel. Because I used to be an Excel spreadsheet queen, and I used to be spending probably about 2 hours after market to pull the time series data into the Excel spreadsheet and then just add everything up, and then to plop those lines, and then the next day to track whether we have new higher highs, higher lows, until one side is exceeded. And then you have the exhaustion of the average range. So all of those indicators are very useful for me. Our market profile indicator is just like, a slightly prettier version of other market profile indicators. It comes with a lot of functionality. Whoever's using it, they find it super simple. Even though it has a lot of inputs, like if I show you the inputs here, it's so customizable. This is one of the things that I wanted to have so that I can mess around with it as much as possible. Here are the session schedules, so you can define all of the session schedules like individually. And the really cool thing about our indicators is that I have this backtest mode right on the chart. It doesn't erase the candles, but it will show you exactly what's happened. Like here I can see that during Tokyo we exceeded the average session range to the upside. Then we failed the auction to the upside that was going upside. Went back into the range, created a neutral day. So all of that pretty easy to see. And it just saves me a lot of time. I don't want to sit here for 4 hours doing my analysis and doing the levels manually and all of that. It's just, it's such a time saver. But yeah, use whatever you want. Obviously, there's a ton of tools out there these days. I'm a little bit set in my ways, so I do stick with AMP Futures, which has CQG futures data on the back end, and this thing that you see here is the MetaTrader 5, not 4, 5. That was their attempt at going into futures, but I'm not sure how successful that was. But I stick with it because I'm used to it, and I can do everything in like a blink of an eye. I don't have to think about it. Their crosshair also can tell you ticks, so if I'm doing measured moves, I can very easily see what the pullback was and very easily plop my measured move wherever I'm going to put it. So yeah, it's just something that I'm very used to at this point. Okay, so Mike says, does the establishment of initial balance and the possibility of failed auction reset with each session? Yes. So this is what we call market generated information. So we don't carry over the initial balance from yesterday. We have a brand new initial balance every day. Thereby is the beauty of market profile, because every session you have a new initial balance. London has its own initial balance. COMEX has its own initial balance. The cash session for equities has its own initial balance. And it just helps you to have new orientation points as the new market participants start to move the price around. Many people criticize profile, I think mainly because they don't fully understand it, and it does take a while to understand it, but it's so endlessly logical once you realize how simplistic it actually is. It looks super complex, right? It's like, oh my God, initial balance, failed auctions, extended auctions, auction fades, a sustain this, a value area, single prints, what the hell, right? But actually, it's just got like about 4 different reference points, and you just flip around between them to find your situational awareness for the day. So the next question, actually, I think it ties very well into this. Wu Ping Li, Jesus Christ, learn to read, Dee. He says, they say, what do you look to decide being bullish or bearish for the day? So here's the thing. I look at the open in relation to the previous value area. That's also a profile thing. So I have 3 conditions. Are we opening inside value, outside of value, and by how far outside of value? If we're opening really far out, that's a gap. So outside of range, outside of value, opens up the possibility for a gap fill. If, however, you're opening with a small gap, but you're still sort of inside the range from yesterday, inside the session range from the previous day session, that is usually quite bullish or bearish in the same direction of the open. But when you have a gap, very frequently that means the opposite side might take hold at some point, thereby giving us a potential for a gap fill. So all of that just brings more situational awareness, and I call it the open sentiment, but really it's just a fancy name for the most likely direction. And based on those 3 conditions, so whether we're opening inside value, therefore in balance, right? That opens up a potential for a more neutral day, range bound. So I will immediately look for failed auctions and maybe even extension to both sides of that first hour of the trading range, aka the initial balance. And then just look to take profits in the middle on most days. Unless we have like a really strong trend, then I might try and catch the full extended move to the opposite side, the full rotation, as we would call it. And again, yet another, it sounds like, wow, rotation, what is that? It's just going to the other side. And that's all that means. So yeah, being bullish or bearish for the day will likely play a huge part depending on what is going on the larger time frames as well, to a degree, but then where we're opening in relation to yesterday's value area, aka the open sentiment. Spartan Nick says, how often do you take profit and then see the market continue past your profit target? How do you deal with that? That doesn't actually happen to me a lot because I base my system on the actual reversal points that have a high probability of reversal. So go figure. When I'm looking at, let's say a failed auction, we might have a possibility in failed auction in GC here. So the textbook profit for this particular setup would be the opposite side of the initial balance. But if it shoots way past it, well, now we have a neutral day type and we're hitting some Asia lows around about that area too, which only increases the chances of going into the middle, so back up, right? So pinging like somebody's pinging a ball in between 2 walls, because now you have the extension to both sides and it's going to be ping, ping, ping. It's like, Hoke calls those cash register days. They work better on equities, I think, because they have a more even distribution on those types of days. Gold and crude oil, they are a little bit skewed, so there's always one side that sort of pulls things. And I think on some days that's also true for equities. But I have seen equities have very, very regular neutral days where you can perfectly just ping about 3 or 4 trades on the day from the top, from the bottom, from the top, from the bottom. It's just like, it's a lot of work, but it does, it's effective. Let's put it that way. So if the market were to completely go smashing through my Asia low, which is another reference point, and then to keep going, I then have an extra information. So I won't just go there, boom, boom, it went past my target. I left money on the table. I don't really care about that because my setup worked out. I took a statistically viable target. Having said that, if I do see single prints left behind to the opposite side, that's new market information which I can use to maybe run a second trade rather than cry over the fact that we've had some more ticks coming into the market and I wasn't in. So it's been a very long time since I was bothered about like taking 2R rather than taking 6R, because that just doesn't happen to me very often. I've got to be honest. Most of my trades work out to about 10 to 20% of the overall move that ends up happening. So some of the markets that I trade, they're very double-sided. So they're very, it's like crude oil. Take crude oil into consideration. It kind of wags up and down in the same session like crazy. And that's like the normal thing for crude oil. We're a little bit less crazy these days, but it still has that double-sided movement on a lot of the days. You're thinking, all right, we've had a sustained auction, let's keep going. And then Euroclose comes, brings a failed auction, and then it rotates all the way down. So some of the markets that I trade, they're not as single directional as equities. This is actually one of the reasons why I really enjoy trading my markets, because I love that double-sided action. I actually live for that. And whenever we have a single-sided day, I'm like, oh, boring. So yeah, I don't care whether something goes a million ticks because I put it in the, let's put it this way. The way I look at my trading and market movement in general, I put everything in sort of probability buckets, so to speak. So if I see a sustained auction move, like a trending move that kind of goes for a bazillion ticks, I know that those movements are true trending days with multiple single prints on the profile, really crazy, extends to like 1%, 2%, 3% on the day. Those are not days that happen every day. If you're lucky, they happen like 8% of the time, okay? Some of the less crazy trending days will happen at a rate of about 25 to 30% of the time, especially something like equities. But overall, you have all the other rest of the times, 70%, when we either have a limited auction, so it kind of pops outside of the initial balance, doesn't really go anywhere and settles, or we have failed auctions in a range-bound day. Now, range-bound days, I went and looked at my statistics. And the way I define range-bound days, it doesn't have to have the extension on both sides. It just has to have a D-shaped profile, evenly distributed profile. So no super big extensions either side, just kind of everything building structure in the middle. Those sorts of days across the board, they happen at about 56% of the time when you're looking at the entire year's worth of sample size. So why cry over something that you missed that happens at a very low frequency rate and not focus on the fact that you did manage to take 2R, 1R, 3R out of the market? That's an excellent risk reward, right? So I think you need to change your mindset over, oh, boo-hoo, I missed out on 100 points, to changing it to a positive mindset. Hey, I took 70 ticks out of this. Well done me, because I used a 30 tick stop and that was a 2.3 R multiple. That's a statistically viable target. Yay. Next. So you need to unglue yourself from this idea that you will catch every tick on those big, large moves that are outliers. That's all they are. They're outliers. So try that. Maybe a switch in mindset will help you there. Do I ever use EdgeTool? All the time, man. I had my own algorithms and I still have them, but frankly, I just love the fact that EdgeTool came up with their tool. I did have it open somewhere. Here it is. So I already have it open. So I was kind of looking up green and red days yesterday for crude oil, just to try and find some kind of confluence. And it did say 60% red, and I had that reversal. We ended up having a sell-off. I wasn't in on it in the end, but yeah, it's just how it is. I always use EdgeTool to check for relevant data. Actually, I got Andre from EdgeTool. He tends to be in here sometimes during this summer day. He very kindly agreed to include the TPO TPO report. I think that's in indicators actually. Yeah, so TPO, because I wanted to see the value areas, and they are still working on the buckets for a weekday, because I wanted to see it by weekday. And if Andre is in here, or if he rewatches this, it would be nice to have this by session, because I don't use 24-hour value areas. I think that's more suitable for somebody who's going to swing trade. Like, we have a lot of time to wait for the market to do its thing around these very big value areas. I want to see it by session. So if we can have it by weekday, and then also to be able to change the session like we can for, let's say, the initial balance breakout. So that would be extra useful. But yes, I use EdgeTool to quite a bit of... where was I going with that? I use EdgeTool, yes. The thing that I like to look at is the green and red days that I was just showing you on crude oil. Here we go. Green and red days by weekday. Love that stat. I also changed the settings to go into the actual session that I'm looking at. So if it's crude oil or RBOB, gasoline futures, it will be the NYMEX session. I also like to look at different date ranges. So I will typically look at 6 months. I will look at year to date, and I will also look at the 3-month sample size. And those will change. Like, obviously, you can't use a super large sample size for something like this, because it's going to dilute. The data. So you have to use something that is relatively close. Markets change all the time, and just having it at a click of a button, this is like incredibly useful. I absolutely love EdgeTool, guys. Another thing that I look at is the initial balance breakout. That's somewhere in here as well. Here we go, initial balance breakout. So if we go and change the session, the active session, to, let's say, short London, because I want to look at it from London Open. This is an EST, so that means 3 a.m. all the way up to the start of NYMEX. So I cut it off at NYMEX beginning, which is 9 a.m. And then I want to see the probability of how often we get a single break, how often we get a double break. And here you don't get that much difference. It's like 55% single break, 43% for a double break. So to me, that doesn't really have that much strength in statistics. But if I do the same for gold, for example, single break jumps to 78%. Now that's something I want to look at. So I'm like, okay, so if we get a single initial balance break 78% of the time during this short-term London session, I'm not going to be looking for neutral day types. And if I'm doing a failed auction like we've got here, I'm not going to be looking for anything more apart from the partial failed auction down to the very area that might pose a problem. In this case, that would be a demand on a 30-minute chart around 24.71.5. That would be like my absolute final target if I was going to run a failed auction short. Okay. Sometimes if the initial balance breakout on EdgeTool shows me there's like 60 or 70% chance of a double break, I will then extend my target to include that smash to the other side, thereby extending my target a little bit, and then expecting that neutral day type to kind of pull it back into the middle. So very, very useful. Like, if you're not doing EdgeTool, what are you doing, right? All right, let me see some more questions. Leah says, can you show us an example of how you journal a trade? Well, I gotta be honest, guys. I mean, it's been a while since I've kind of done super detailed journaling. Like, my journaling these days is more to do with the levels and what sort of stop loss would have been needed there. Can I lower it? But if you're not at that level where you know that you have a system that works and you just need to change a few things around because maybe the timing is off or the market's gone quiet on you. So, you know, if you're not there yet, you might need to have two parts to your journal. One, the emotional journal. How did you feel about that trade? What time of day did the trade actually happen? So all of that. But for me, I mean, I can show you how I journal things. I have EdgeWonk. I quite like EdgeWonk. We're all about the edge, aren't we? So EdgeWonk, EdgeFull. Let me have a look. So, what would that be? I think it's in diary. Okay, so some of the things that I've done recently. Let's expand this. Some of the stuff, like for example, this is my example of a journal. So I already know my times of day and everything, and this is something that actually had a massive impact on my profitability in crude oil in the last 3 months. So I said on a big sustained auction day, I modified the ASR indicator to show just the final sort of 2 hours of trading and half an hour past settlement. The market turned around within 2 ticks from it at my 7 p.m., which is 2 p.m. Eastern, which is 1 p.m. CT. So that's something that I figured out how to fade the trending days. I don't advise anybody to do this, and this whole thing is an educational side anyways, so that's a disclaimer. It's not an advice to do anything, it's just how I do things, okay? So I've noticed that the market turned around within 2 ticks of ASR right at that particular time of day. And then, what else? Oh yeah, so some of the little things that I was looking at, the equi-volume candles. So actually I can probably show you those here. Let me get the copper because that might be quite interesting. So equi-volume candles are very good to run these snapbacks to VWAP, which I like to use with something like either the failed auction setup or another high probability level like an ADR or ASR. Then what I would be looking for, okay, here's one. So let me just see whether you can see that, just to make sure that I'm not hiding it. Okay, that's good. So if you see down in this area in the bottom, you have this big thick candle that crosses over the 9 EMA and then runs straight to VWAP, where I like to combine this with my average session range low or average daily range low and even Asia low reversals. And it works like exquisitely well, but you have to be very careful on the 1 minute chart how you're going to read the candles. I want a very strong candle that takes out several prior candles and then closes pretty much without a wick in the opposite side. And this is where equi-volume candles have helped me a lot, because I saw Coach Jay use something similar on Quantower, and then just by kind of sniffing out things on Ninja, I saw that this was available, and I'm like, this looks good. So I've actually started using this as a more of a timing tool for me. So it's not to replace what I already have. It's just literally to just kind of improve my timing. So we use a lower time frame, very clean cut price action, and eventually just and eventually to just improve the stop loss size, you look for maybe a stop run to improve the position. So yeah, that's kind of my journaling. It's nothing super exciting. What is this? Holes in the profile. Right, so I was experimenting here with the tick chart. I didn't end up liking the tick chart, so I'll be very honest with you. I used 500, 100 tick chart, blah, 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 everything. Didn't quite gel with me, so I decided to let go of that. Yeah, and then just a few things about, so yeah, that's literally like how I journal. I don't think that would be terribly useful for somebody who's maybe new to this game, because what I would advise doing is, well, actually, let me try and show you how I would do my journaling if I was like a completely brand new trader. So let's say emotional checklists. That would be where I'd start. Do you feel calm? Have you slept well? Do you feel pissed off? Did you have an argument with someone? Whole bunch of things can happen to us. And if you come to the trading desk with any of that baggage, emotional baggage, you're going to make bad decisions, especially in the beginning. You're going to sit there angry and you're just going to go, take that market, and it never ends well. So before we even start to trade, an emotional checklist has to be somewhere in there. I actually had this whole routine where I would do a 90-minute bodybuilding session in the morning before I would even go to trade. And sometimes that meant getting up at like 5 a.m. But yeah, I did it and it worked. And, you know, over time, it became just normal to feel pretty calm. And I learned how to work with my own emotions. But to begin with, I'm not exactly the most emotional person in the world anyway. And then once you have the emotional checklist, sleep, emotions, nutrition plays into that, maybe some supplements. If you're into meditation, that can be a very good way to calm yourself. There's a thing called Yoga Nidra, which is actually a pretty nice way. It just means sleep. Nidra means sleep. And it has helped me to just calm down, because at the moment I can't really exercise for a multitude of reasons, and I needed something to calm my nervous system down on certain days, and that worked. From there onwards, you can go into more detailed journaling on the technical side. So technical journal. When did the trade occur? So time of day. What sort of price action or price event? This can be anything from supply and demand, bullish, bearish engulfings, triangles, megaphones, profile conditions, failed auctions, extended auction fades, whole bunch of stuff. And then what level did the price event occur at, if at all, right? And then what sort of stop size? This is like not you being in a trade. This is just observational, right? So what sort of stop would be needed to run that trade? Like, let's say how many points NQ shot past on a given level. So what sort of stop would you have needed? And would there be a way to kind of catch that move on a slightly smaller stop, maybe looking at intra candles or profile or something else at the time? Now, this is where recording your entire screen and the events that happened might be helpful for some people. If you're a visual person, I'm a very visual person. I have photographic memory, and to me, I literally see something once, it stays up here, right, forever. And I can actually recall any setup to a pretty great detail, which obviously helps, but I realize that not many people have that. So recording your screen, if you don't have that photographic memory, might be a good thing. And then finally, how far did the move get to, right? So how many ticks did it actually run for? And is there any obvious level that it stopped at? So all of that can be a part of your journaling, and it should help you to start getting that systematic process into place, which naturally increases confidence. It naturally increases your experiential knowledge. I'm very big on Kolb's experiential learning cycle, where you go trade, then you review, and then you try to improve, and then you do it all over again. That's called Kolb's experiential learning cycle. All right, did I miss anyone? Let's see. My configuration on the DOM is the same. It's just default on Topstep X. Would you please let me know what are the indicators of music? They're all Blatek indicators, guys. So it's a Blatek MP, Blatek SD, Blatek DR. They're the three main ones. You can find them on my YouTube channel, actually, underneath every single video if you're interested in that. But, again, you don't have to use Blatek at all. Like, I use it. I know that a lot of other people like it as well. But, you have a lot of other platforms. You have TraderTainment that has TPO profile for free. You have Ninja Trader. I think they also have their own profile. I find it a little bit clunky, though. This is one of the reasons why we decided to do this many years ago. So here we go. Order flow volume profile. So not the indicator volume profile. So when you right click and go into indicators on Ninja, because I know a lot of you use Ninja. So I'm just trying to give you options of how you can use it. And I mean, look, I'm biased, right? I work to commission these indicators, so I love them and I think they're the best thing ever. But if you don't have that, I was actually showing people how to do this. So not this order flow indicator. Sorry, not that. That's the View app. Oh God, I need more coffee. So where it is, order flow volume profile. So not the one in the indicators. When you go right-click indicators. No, not that one, because that one doesn't display things properly and you can't control it. What you want is to go to the little pencil and then order flow volume profile, and then to drag it from whatever time of day that you want to drag it from, and then to go into properties and to change this. If you want to look at price, you need to change this from volume, which is going to be the default setting, to price. But I already changed it to default to price. And at that point, it's going to show you something more akin to what I have on my chart. I also like to display boxes. So here you get POC. You can even define the initial balance range. Can't quite remember how to do that, but we decided to include that as just like a normal part. Like you plop it on the chart, it's going to automatically do scanning of the session. So we have that hard coded in our indicator. You won't find that anywhere else. So literally as you go into session schedules, as a default, you have TPO schedule 1. For me, that is the comic session for this one. Then you have schedule 2, which is London. Schedule 3 is part of the Tokyo session. All the other sessions, you can configure many of them, but you know, these are the 3 main ones. They come as a default, right? Now, we also have a way to kick in to the new session automatically. If you see this dot here, can you see that? So there's a dot on my little panel here. That tells me that I have the automatic session schedule change. So there are many little things about what we've done that optimize the process without you having to spend 30 minutes to an hour setting up your volume profile and then wondering whether it's correct, whether it's this, whether it's that. I also added the graphical overlay that you can manipulate anyway. So, you know, this is why I'm so biased and why I stick to this, because I think we've done a pretty good job at doing something that was very much needed in the industry at that point. This indicator is not new. You know, we've been on the market for about 8 years now. So, yeah. Okay, let's see. Couple of more questions, and then I'm going to be finishing up. You see that thing called revenge trading? I don't know how to get over it. If I make a loss, I would just keep finding ways to get back in the green, and it has cost me a lot. I need help. Okay, this is pure emotional trading. So, let me book some profits. That copper trade is not really making much headway, so I'm going to book it here at 187 ticks. Like I said, I did one long trade scalp on gold, so that brings me up into this combine as a sort of proof of concept and how London session is doing to $912 for the day. So we're going to finish it there. But let me go back to the revenge trading. So revenge trading is the emotional side of our brain. It's the lizard brain. It takes over. I used to have problems with not revenge trading, but slight over trading when I first started. The way I battled it is to go to the gym and to lift some heavy stuff until my glycogen reserves were completely spent. Why? Because there's a biological process that happens. So I'm going to teach you about it now. Whenever you're feeling very emotional and you start getting annoyed by something, whether it's revenge trading, whether it's a loss in the market, that's your trigger. So you have to stay aware of your triggers. How do you battle emotional triggers? And no matter what you say, revenge trading, over trading, everything starts from that emotional side of us, okay? The way you battle it is by draining the fuel for the fight or flight response. Revenge trading is a part of fight or flight response. You take a loss, your brain sees it as some kind of a threat, and here's an interesting thing. Our brains can't tell the difference between a bit of lost money and an actual threat of death. that we used to face as evolved animals back in the day, when a saber-toothed tiger might be coming after you, your fight or flight response kicks in. So you either run or you fight, right? Well, this is the same thing. So revenge trading, that's what it is. Over trading, that's what it is. Fear of loss, guess what? Same thing. Fight or flight response. So unfortunately, you have to tackle that. And the only way to tackle that is to drain the fuel for the adrenaline that kicks off the entire response. And that's glycogen reserves in your muscles. This is why low carb and keto diets actually work pretty well on an emotional side to completely level you out. Even if you're an emotional person, if you lower the carb consumption, why? Because the carbs fuel, like that's the glycogen. They replenish glycogen reserves in our muscles. So if you go to the gym and you smash some heavy weights for at least an hour and you come back, try to trade after that. See how you feel. Because at that point, you will find that your prefrontal cortex is going to take control and you're going to feel more in control. So try that and let me know how you go. But to me, it's been completely transformative, especially when I had my first big loss many, many moons ago. And I just thought I was being such a muppet, and I had to fight my own, ideas of why it happened. And it just kicked me off on this whole psychology journey that I've learned a lot about over the last 11 years in particular. Oh, Joshua Williams. Okay, thank you very much. The trading lords have blessed us with the most valuable education in this industry. So glad you chose to be of service and give back to the community. I'll be here at 4:30 a.m. every morning. Oh my God, that's dedication, man. That's what we want to see. Thank you so much, Joshua. I know it's very, very early in your part of the world, but I'm going to say thank you to everybody who joined me here for this session again. I hope you found it useful. Don't forget to check out that 5 minutes or less by Robert about the new performance dashboard. I will be on fast markets today, so come and join me for some more shenanigans and some more trading. In the meantime, I'm going to go have a bit of a rest. Let's try to be less grasshopper and more market stalker in the meantime, right? I'll see you guys for fast markets. Take care.